Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, February 21st. Today is the bulk of the economic data this week is today, so we'll kind of go right into it. We'll start off with the market manufacturing PMI flash. Wow, that's a long mouthful right there for the month of February. So anything above 50 on these two indexes coming up on the market is basically considered expanding or improving conditions here. So as you can see here in January, it was doing pretty good at 55.5, and in February went up at 55.9. Now this is, of course, the manufacturing industry kind of gives us a gauge as to manufacturing, and then now we got the services. So we got the market services PMI flash. And the previous reporting came in at 53.3 and it jumped up to 55.9. So good overall improvement there. However, we got the existing home sales for the month of January. So uh, we had back in December 5.57 million annualized existing home sales. And forecast go supposed to be kind of that same range or slightly higher at 5.59. And they tipped down to 5.38 million. Now, there's a lot of variables that kind of go into this type of number here, but uh, year over year, if you look at the inventory levels, it dropped annualized about almost 10%. It dropped 9.5%. Now we got about 152. I'm sorry. Yeah, it was 1.52. Excuse me, not 152. About 1.52 million homes, existing homes for sale right now. So that kind of brings this average down, but year over year we're up a bit year over year. So on our purchases side of things. So if you can kind of gauge where things are, there's a lot of inventory up there. Home prices went up. Home price I think was up. Median price went up about 5.8%. So a lot of good things are kind of happening in this. So there's demand for it. It's not with the whole, people more money, are making more money. That's going to only improve our affordability, which could push us a little bit further. This is kind of why when we saw the new homes for sale, that's getting to be important primarily because we just simply don't have enough inventory out there. We're down at a 3.2 month supply right now, existing home sales, and that's the worst on record. On a normal or balanced market, we're typically at about 6 months inventory. So this is kind of gives you a gauge as to how far off we are from a normal market right now. We simply just don't have inventory. And having the new homes coming onto the market, this is kind of helping relieve some of that. So let's kind of jump into the headline news. Stock market's up. Most of the investors are kind of waiting on the FOMC minutes. That's going to be released here at about 11 o'clock Pacific Standard Time, which is to be released. What they're going to be looking for is information on the data. This is minutes from the last meeting, which was Janet Yellen's last meeting as a Fed chair. Now, obviously, they're going to be going some. They recognize that we have a new Fed chair. Things might be different going forward from where we were with Ms. Yellen. But what they're looking at, they want to see what their Fed's viewpoint of the increase in the wages, the inflation, what their thoughts are on the process. Now we've had a few speeches out there that seem like a lot of the Fed speakers were trying to downplay the concerns on inflation and where things are going, what's going to really drive things up. A lot of them were saying we're long ways away from to really needing that level, but again, I think they want to see more hard data, like their minutes, to see what was discussed in the background and such. So let's go ahead and take a look here at the bond market here. And the bond market, as you can see, we get this still this range going downwards. We're up towards the upper level here. We're down about 3 basis points from where we left off, so there's really no change in pricing. As you can see, we did start off slightly higher, but from where we left off yesterday, we're down about 3 basis points. And as you can see, we're kind of reaching this upper echelon of the trend line here. So be very cautious here as this could quickly change and worsen as we're on the upper part and we got a lot more room to the downside for the bond market to reach. And the other end we have, the yield, it's a 10-year Treasury here. Now this is going to hit at some point here. As you can see here, we got this overhead resistance, been trying to break it above it, and it just it hasn't been doing it. But it's going to have to go one way or another here. We're at a point where if you put this trend line here, we're pushing right here. There's not much more room. You're going to be able to go another day too much before making a decision. You're going to go down or or continue or break above it and continue that trend upwards. So at some point, it's going to have to change here. Maybe today or tomorrow, sometime this week. It looks like, as I mentioned, you got this trend line, and it's just kind of going this way. So this trend is kind of pushing it either up or down. It's going to have to make a decision. Now, if it breaks above it, we got probably next trend. Another resistance level won't be till about 3.3% or 3.04, right in that range. So you got a long ways away. So that could be a lot more of a drop for bonds in terms of rates going up much further here. So just be on guard here for a possible, if you are out there currently in the middle of a transaction with a refinance or a purchase, you might want to really kind of watch possibly locking in very soon, or at least have your finger on the trigger, so to speak, and ready to lock in. So if it drops, it's going to happen quick. All right, so that pretty much wraps things up. Rates are about the same as where we left off yesterday. Now, later this afternoon could, be the results from the FOMC minutes could be the big thing that could push it one way or the other. So just be very cautious today. Well, every day. It's been so volatile of late. But just follow me on Twitter. Come over to Twitter. We'll get more updates later on at Mike Bjork on Twitter. And you guys enjoy the rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye.